you that follow us on a regular basis, you know I always talk about risk management. I think it's very critical to your investment criteria, and it's something you want to look at every time, and insurance is a big part of that. So I asked my friend Beth Coots to come on today. Beth is an insurance broker based out of Texas, but she does nationwide. Matter of fact, she works with us on a regular basis. So Beth, thank you for coming on today.
Thank you for having me, Joe. How are you doing?
So how's things in Texas? Everything good?
Everything's good. Can't complain.
All right, very good. I know that you're still getting lots of Californians coming your way. So, you know, are you still seeing the big influx?
Oh my goodness, it's been huge. Yes, all my neighbors are from California. In fact, there was an article in the San Francisco Chronicle about the mass exodus of California to Austin, which is where I am. And it's true.
Yeah. So hopefully that stops. We need to keep some people here so we can keep selling commercial real estate. All right, you know, risk management is something I always talk about. And, you know, I really think it's critical for our viewers that are becoming real estate investors to really understand the whole process of, or what they should be looking for in finding a good insurance broker or agent. You know, can you kind of give us some tips that we should be looking for in one of these individuals, please?
Oh, so I tend to look at, you know, this from a perspective of have your team around you, have your CPA, have your real estate attorney, when you're going of you know, finding your people with insurance. You want to find somebody who has experience with real estate investors. It is definitely niche.
Beth, you keep cutting out.
Oh my gosh. Okay.
Yeah. It keeps cutting out for some reason. I don't know what it is.
It's because I'm out in the boonies. That's why. So I don't know what you got from that, but in a nutshell, find an insurance broker who has experience with real estate investors. It's a niche. There's not a lot of carriers who do it. There's a lot of nuance to it. So choose wisely. Get referrals from your friends. Ask around. There's a few of us out here, and you'll hear our names.
Okay. All right. What do you think are the most common most understood issues when it comes to property insurance?
Oh my goodness, there's quite a few. I would say one would be coinsurance. People are really confused about that. Coinsurance just means that if you are underinsuring your properties, meaning insuring them for less than replacement cost, there will be a coinsurance penalty at the time of a loss. Basically, you're self-insuring to a greater degree if you underinsure a property. So that would be a big one, and we could probably devote a whole hour to coinsurance. So that's an important one right there. Knowing what replacement cost is. It is not the same as market value. That's a huge misunderstanding that I hear almost daily. Market value, that is, you know, what a property is valued at based on the comps in the area where the property is located. Replacement cost is different. It is the cost to replace or repair based on labor and materials. So very different things. So that's another common misconception. Another one that I would say it would be notable is actual cash value settlements as opposed to replacement cost value settlements. These are two different types of policies. And if you have an actual cash value settlement policy, your premiums are going to be lower, but you're also going to get a much less settlement at the time of a loss because you're taking replacement cost and deducting the depreciation, which can be huge. So that's another one I like to talk to people about, you know, just clear that up.
Who puts when you have a claim and somebody comes out to put a value on your property, is it does it vary by area, or how does that work? They just have somebody come out, put a value on it?
Well, it does vary a bit by area, not as much as market value, but somewhat. It also varies by the type of property that it is. But in general, an adjuster would come out at a time of a loss, and they would determine, what the damage was, what the replacement cost was, and if there is an actual cash value settlement, what the depreciation was. So usually they will rely on a valuation tool that's common in our industry called Marshall Swift. But again, it does vary slightly by the type of property and the area that the property is located in.
Yeah, it would be. What I think is going to be, me as an investor, we're always looking for the highest returns. How do we put, as little amount of money out on insurance as I have to? But I know the minimums. What if I'm an investor and I have an asset? What is the minimum amount of insurance that I should be looking to acquire?
Well, we have a saying in this industry, and it depends. So, and not to sound vague, but it's so appropriate because it does depend. And that's where a good broker is going to come in. They're going to look at, what your needs are, do you have a bucket of money set aside to self-insure to a greater degree and therefore pay us out premiums? They're going to be able to evaluate, okay, well, if you go full replacement costs, this is going to be what your premiums are. And this is what you're going to be looking at the time of a settlement. And here is the difference. As opposed to, well, here is what you'll be paying if we go with an actual cash value settlement basis, or less, have that coinsurance penalty in there. This is what your premiums will be, and this is what you'll get at the time of settlement. And here is the difference. And then let's compare those. I just did one of these for someone the other day, and this gentleman has close to 100 properties in Oklahoma. And we had to look at several scenarios. What if we go at 80% of replacement cost? What if we go at 70%? What if we go to 100%? What's the difference in those premiums? What's the difference at the time of the settlement? Is it worth it to save a couple $100 a month, but then be out of pocket thousands, tens of thousands at the time of the loss? It depends. It depends on this person's cash flow. It depends on what their needs are, what kind of money do they have set aside. So there's a lot of factors that go into that. It's not a simple answer.
Yeah, I knew it wasn't going to be.
No. Very custom.
Yeah, insurance people are like talking to tech people. Sometimes your head just kind of spins when you're done. You're like, okay.
Sorry, trying to speak English here.
Yeah, exactly.
Not Texas.
It's what. There's got to be some policies out there that our investors can taken. If you're new to the game, you don't really know what is really not worth taking the time to invest in. What type of insurance policies do you feel are probably not a good investment on a multifamily or an office and retail investment?
Oh, goodness. So I'm going to qualify my answer by saying there are times that all different types of policies are worth it. But in general, I would say be very wary and look very closely at basic form policies and actual cash values settlements. The reason is they are much less expensive, but the coverage is far less comprehensive. And the settlement at the time of a loss is also going to be less robust and maybe not make the insured whole, which is the whole goal of insurance, is being made whole. So
if I'm a new investor and I'm buying a 10-unit apartment building right down the street from you, what kind of, I don't know what a good price in Austin would be for 10 units these days. I know everything's gone up so much. But what kind of insurance coverage would you suggest for an 8-unit building in Austin, Texas right now?
Okay, so again, some of this is going to be determined by a carrier. So if it's an old 10-unit apartment complex, sometimes we're not going to be able to get the tip-top coverage. But let's just say it's, fairly reasonably new. I would say look for a special form policy, which means everything is covered unless specifically excluded. I would say look for a replacement cost settlement basis. I would say look for general liability. Like what that means is, if the insured becomes legally obligated to pay for damages for bodily injury or property damage, you were going to want $1 million per occurrence minimum, $2 million aggregate minimum, 10,000. About some of them are 5,000, but for medical payments, and that would be pretty standard. And if you're in an area with flood, you want to be sure that you have extra flood coverage on that as well. And in Austin, Texas, a lot of areas are in flood areas.
Yeah, we had a property we owned in Dallas on a hill, yet it was in flood. We had to carry extra. We had flood insurance. I'm like,
yes.
This seems crazy, but of course, we fell into that area. All right, how about a office or retail building right down the street from you? What kind of insurance would you put on that?
It would be the same. You would still want to look at a special form policy with a replacement cost. You would want no less than, I would say 80% coinsurance, the very minimum. With the general liability, $1 million per occurrence, $2 million get 10,000 med pay. That would be just strict standard office building. If there are some variances, if this building houses a restaurant, you're going to have some different things involved. And then also with the apartments, there are different things that are involved with that. Like if there's a pool, if there's tennis courts, if there's a playground. So again, it's kind of hard to give you just a very simple answer, but in general, those would be the things that I'd look for. Special form, replacement costs, general liability of $1 million and $2 million aggregate.
Okay. Can you kind of tell us, there's a difference between Class A to Class C assets and the way, the different variations of the insurance there. Is it pretty significant? I can't talk today.
That's
between
easy for
Class
you to say.
C?
It does impact the insurance. So,
Sure.
when we're looking at something like Class C, typically that's going to be an older building. It's going to maybe have more lower income people, maybe younger people. And the coverage that you're going to be able to get on a Class C is not going to be the same that you're going to be able to get on a Class A. And then, of course, Class B, it's sort of in the middle there. So it really depends. The age of the roof, what updates have been done. Has the HVAC been updated? How about the electrical, plumbing, all of these things. So
Right.
That's where underwriting comes in, and they take a look at the property and make their offers.
I swear, every time, we specialize in Class B and C, and I would even call some of them D, the ones that we're going to be on the multifamily side, we're going to redevelop them. Our plan is to just completely redo them. And so we don't really tell anybody we own them, but we have great tenants. We take care of the units. The outside, we're just kind of like, there's no need in putting money into this for the next several years because my computer is going to go dead. They unplugged it.
Oh my God.
But yeah, imagine that. I got to find the power. But I'll be right there. But I always hated when the insurance guys are going to come out to inspect, and I was like, oh, they always find something just to prove they were there. I swear to God, that's the only reason they would do it, and you guys can make our life hell, but it does. Yeah, well, not you, yeah, but it does. You really got to keep your property up to, as a new investor, you've got to understand that, you need to keep your property up to snuff when it comes to your insurance coverage, because let's say there was an incident let's say there was a fire in a unit. What could keep an insurance company from doing a payout if They go out there and they inspect. They go, well, you guys didn't have this in place, so we're not covering it. Do you see that happen very often?
No, I don't. But I would say that, it would depend on the policy itself. Obviously, if it were a criminal act, like if the owner decided to commit insurance fraud and try to make money by setting his property on fire, that would be something that obviously not only land him or her in jail, but, mean that they wouldn't get a payout insurance.
Okay.
And then, of course, even basic form policies, they're called fire policies for a reason. So there's not a lot that's going to, eliminate fire. But this gives me a good opportunity to add for new investors that are looking at multifamily. Make sure your renters have renters insurance. So important.
That was going to be my next question. Yeah. So it's renters insurance, coming from an insurance side of it, yeah, I'm sure, you're going to say, yes, you need it. But do you really feel if you own the property, would you require all of your renters to carry renters insurance? And if so, why?
Oh, absolutely. And the reason why is whether they opt for the property coverage or not, they're going to have liability. At a minimum, they will have $100,000 of liability on that policy. They have the ability to add, 20,000, 40,000, 60 of property coverage as well, meaning if there's a fire and their furniture goes up in flames, they'll have that replaced. But on that liability side, let's say your tenant decides to have barbecue on their patio and catches the place on fire. Their policy would be primary, meaning you do not have to file a claim on your policy, which keeps your premiums down. Also, oftentimes the carriers will give you credit for making sure, for mandating that your renters have coverage. So it will, in theory, reduce your premiums as well. Not only over the long term, but in the short term as well.
Can you require your tenants to carry renters insurance?
Oh, yes. Yes, you can. And you can also, if they don't, because it would be mandated in the lease. And if they do not carry the renter's insurance, you can force insurance on them, which is another type of policy, which you would then force the insurance on them, meaning you would be covered, they would not, but you would have the ability to add that premium to their rent, to their lease. It's just like with, real estate.
Okay. Now let's move on. I know we focused a little heavily on multifamily. Let's go on to office and retail and industrial, but liability insurance. When you're a property owner, is there any other insurance that you'd want to have? If you're a landlord, you're getting your office, industrial, or retail leased out. What kind of insurance do you recommend for those folks?
For a landlord with an office building, and if they're not inhabiting that space, the main thing they're going to want is property and GL. Now, there will be, requirements of their lessors, if I said that correctly, as well, but they will want to have property and GL too, because they have an exposure there.
Okay.
So, again, going back to replacement cost on the, based on a amount per square foot for the property. And then you want to have $1 million minimum per occurrence for the GL, $2 million.
And the same with retail?
Yes. Yes.
Okay. And industrial, I guess, too, correct?
Correct. But, there are variances depending on what those properties are being used for. Now, if they're leasing it, obviously a lot of that coverage that's specific to the type of business will come on the tenant side. If, for example, you're leasing out a property that's being used for a restaurant, the lessor is going to have coverage, liquor liability, restaurant coverage, which is a whole different animal. If liability for if people get food poisoning, liability if somebody leaves, has been drinking and hits a bus, those kind of things. So there are specific things depending on the business that's in there, but that's usually going to fall on the tenant.
Yeah. And as if you're a landlord watching this and you've got tenants in place and you've got a triple net lease with them, you want to make sure that they're carrying the proper insurance. So it's something that you want to make sure it's in your lease to make sure that your tenants have the proper insurance, and you need to verify that it's actually being done. Otherwise, how often do you see that happen, Beth, where you're a landlord, you've got a tenant in there, they let their insurance expire, they don't have any more coverage, they get sued. How often does it really come on to the landlord?
I don't see it as much in those types of scenarios as I do in residential landlord situations, as well as lenders, to folks. So, but it does happen. It's not unheard of.
That's something I didn't think about, is the insurance that lenders are requiring. Can you kind of walk us through what kind of insurance they're requiring? It's pretty much the same as the landlords, right?
Yes. And it, again, kind of depends. There's a difference between commercial lending and residential lending. Typically, they're going to want, at the very minimum, replacement cost on the property. Some of them will say, well, I want replacement costs, but because they know that there's going to be full coverage based on that 80%. Some of them want the loan amount covered. Of
course, yeah. Their money back.
Right, exactly. But again, it kind of falls on, what the replacement cost is as opposed to what that loan is. If there's in a flood zone, the lenders want flood coverage. So.
Okay. If I'm buying an investment property, I want to talk about timeframes real quick. If I'm buying an investment property, get it in escrow, how soon should I be contacting my insurance carrier, say, hey, I've got this property in escrow, I need to get it insured? How long does it take you guys to turn something around?
I would say in my case, it's about
2 weeks.
It depends on the type of property. If it's an apartment, an office building, we'd like to have a month, because then, our underwriters aren't stressed and they have time to, adequately underwrite the property. And then we therefore can get you the best terms because we've given everybody enough lead time. So 2 weeks to pending.
Okay. All right, Beth. Well, give us, what did I not ask you? What's a critical thing I didn't ask you today? What am I missing? I'm always trying to think of all the questions as we're going here, and I feel like sometimes I'm like, oh, I should have asked that. Did we miss anything?
Good. We covered co-insurance, or at least we touched on it. We touched on replacement cost versus actual cash back. Very important. We talked about basic form policies as opposed to special form policies. Talked about the minimum coverages to look for on properties. So I think we did very well on the different types of coverage. One thing I would say to you guys that what we call a hard market. There have been a lot of losses in the past year and a half. So insurance carriers are a little bit, their underwriting is a little more strict at the moment. So things, we aren't getting as many quotes on things as we might have, here. And then there's some different things that they're putting in their tail coverage, the deductibles right now, because there's been so many wind hail. So we're seeing some of that. So it's just something to take note of. It is a hard market. Also, if you need cyber liability coverage, that's been real tough lately. We can do it. You get a lot of declination as well, just because the cyber market's been very good. The hackers and with the bad guys. They stay ahead of the, unfortunately.
Yeah.
So really think of anything else, just maybe risk management. In a nutshell, take care of your properties, update them, inspect them. If there is a loss, You want to secure the property to avoid any additional damage, immediately, and report the claim to your insurer or broker or agent as soon as possible. Send them any police reports, date that the damage happened, what happened, pictures if you have them.
Did you say police report?
Yeah, if it's, theft, vandalism, malicious mischief, there's often a police report.
Yeah. Okay. Yeah, you faded out there a little bit. So,
sorry.
okay. But, well, Beth, thank you very much. You started off with the thing that I always preach, and that's build a team around you. And so when I have insurance, there's one person I call, and she's on this call. So, I mean, it's really, it's key to have the right team in place. And so I hope that our viewers really take that to heart and really build your team. Make sure you can find the right people around you can reach out to on a regular basis if you need or just a question. So, but all right, well, Beth, thank you very much for coming on today. We hope to have this video out hopefully by next week. So everybody that is watching, make sure we're putting these videos out every week. So make sure that you subscribe and make sure you like this video. Thank you very much for coming in. And Beth, I'm going to make sure your information is at the bottom of the video. So if anybody has any questions, they can reach out to you directly. Okay?
Sounds great. Thank you, Joe. You have a wonderful day.
You too. Take care.
Thanks. You too. Bye-bye.